So the RBI has decided to introduce the strips in the state government securities. The strips is the separate trading of registered interest and principal of securities. So RBI issues the state government securities on behalf of state governments to raise the funds. Okay. Now the RBI has allowed the strips. That means the RBI has allowed the stripping in the state government securities. Under the stripping, the cash flows are separated for the state government securities. So what is this idea? Let's take an example. So let's say the XYZ person or the XYZ entity has bought the state development loan or the state government security of 10 years maturity, and the face value of the state development loan is ₹1,000 that has been bought by this entity. Okay, and the interest payments or the coupon payments, they are made annually at 10%. That means 10% of 1000 is 100 rupees. So annual payment of 100 rupees or the annual interest or the annual coupon of 100 rupees has to be given to this entity. Okay, so for 10 years, so 10 coupon payments has to be made to this entity. Now under the stripping, what can happen? So stripping is the process where the cash flows are separated for the government security and the entity can sell these separate cash flows. That means these 10 coupon payments can be sold separately by the entity after the stripping, after the separation has happened. So the 10 coupon can be sold separately. So these are the coupon strips, and the principal amount or the face value or the security principal can be sold separately also. So this is the one principal strip. Okay, so this is the process of stripping where the cash flows under a government security is separated, and there are 10 coupon strips because there are 10 coupon payments and there is one principal strip. Okay, so these can be sold separately by the entities under the stripping. Now the state government securities that are of maturity up to 14 years, that are transferable, that are eligible investment under the statutory liquidity ratio, and they have the outstanding amount of 1000 crores on the day of stripping. So these state government securities that follow these criterias are allowed for stripping. Okay, so these are the criterias that have to be followed if the stripping has to happen. Okay, so state government securities that have the maturity up to 14 years, they are transferable, they are eligible under the statutory liquidity ratio, and they have the outstanding amount of 1000 crores on the day of stripping. So these state government securities are allowed for stripping as per RBI. So this is the concept of stripping under the strips, that is the separate trading of registered interest and principal of securities, and separate cash flows can be sold by the entity that has that cash flows. Okay.